Good day. When Congress first enacted the Research and Development Tax Credit under Section 41, calculating it required looking back at data from the mid-1980s. For modern enterprises, and especially for newly formed startups, this historical record-keeping requirement proved to be a nearly insurmountable barrier. To resolve this issue, Congress introduced the Alternative Simplified Credit, or ASC method. The beauty of the ASC method lies in its name. It simplifies compliance by severing the credit from ancient historical data and gross receipts. Instead, it relies on a rolling 3-year historical window of your actual R&D spend. Today, we will examine the precise mechanics of the ASC calculation, how it provides a highly predictable tax runway, and exactly how the law structures this credit for startup entities that lack a multi-year history of research expenditures. Let's begin with the baseline statutory formula for established companies. If your business has qualified research expenses, or QRS, in each of the 3 preceding tax years, you use the standard 14% ASC calculation. To find your credit, you look at the immediate 3 prior tax years and calculate your average annual QREs. Next, you take 50% of that 3-year average. This 50% figure serves as your base amount. You then subtract this base amount from your current year research expenses. Finally, you multiply the remaining incremental amount by the statutory rate of 14%. The tax policy goal here is straightforward. The government wants to reward your business for increasing its innovation footprint relative to your immediate past 3 years. Because it ignores your company's revenue or gross receipts, it is often the single best method for businesses experiencing high revenue growth but relatively flat R&D spending. But what happens if you are a true startup, a spin-off entity, or a pre-revenue company that simply does not have a 3-year history of qualified research expenses? The Internal Revenue Code explicitly accounts for this scenario. Under the startup exception for the ASC, if a taxpayer has no qualified research expenses in any one of the 3 preceding taxable years, the standard baseline calculation is completely set aside. Instead, the statute grants a flat credit equal to 6% of your current year's qualified research expenses. Let's be precise about how this applies to early-stage businesses. If your company is in its first, second, or third year of conducting R&D, you by definition do not have a full 3-year look-back history. Therefore, you automatically qualify for this 6% flat rate. There is no historical base amount to clear, and there is no subtraction required. You receive a first dollar credit on every single dollar of qualified wages, supplies, and contract research incurred in the current year. As a tax attorney, I always advise clients that the startup 6% rule is a temporary runway. As your company matures, your tax calculation will naturally evolve. By the time your business reaches its 4th year of operations with qualified research expenses, you will have successfully established a full 3-year look-back history. At that precise moment, the startup rule expires, and your tax team must transition your calculation to the standard 14% incremental formula. This means that early-stage tracking is vital. Even when you are utilizing the simple 6% flat credit in your first few years, you must document and substantiate those expenses flawlessly. If you fail to accurately track your early QREs, your baseline for year 4 and beyond will be distorted, which can lead to significant calculation errors or severe exposure during an IRS examination. Remember, electing the ASC method requires a timely filed original tax return using Form 6765. Once that election is made for a given tax year, it is legally binding and cannot be changed on an amended return. For startups, the ASC provides immediate, vital tax relief that can often be used to offset payroll taxes if you meet the qualified small business criteria. Ensure your documentation is sound from day one. Thank you for watching. Please reach out to our firm if you require legal counsel in structuring your company's R&D credit strategy.